The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 11th. Say March 11th or it's the 12th? Today's the 12th. Yesterday was the 11th. Welcome to the March 12th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But more important than that is this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to Steve at TFNN.com. Send it early if you would. And, of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we're beginning our day with a mixed bag out here. The mix goes like this. You've got the NASDAQ up 16 points and the semis that are up 66. Otherwise, the other U.S. indices basically trading to the downside. Dow's down 1%. That's 402 points. 0.5% for the S&P. 23 points there. The Russell's off 0.5%. 10 points to the downside. Transport's down 1.7%. That's a 253-point move. You got gold trading up $10, silver's up 40 cents, light sweet crude up $1.06, and natural gas is off 30 cents. So we'll take a look at, in fact, let's take a look at some of these instruments here, just get them out of the way. Let's take a look at Goldilocks. Let's start there. Up $10, consolidated with inside its daily profile on a weekly basis. It remains above its oscillator and change line at 29.10. That's a bullish signal. The weekly chart is suggesting wants to make a run for 29.74. But we know on the daily time frame, you've got this little buy zone. The buy zone established. I'll just simply open up the daily chart. It's established by those market profiles. When you have the center of profile closer to the top, then to the bottom, you've got more sellers in that zone. That zone is between 20.35 and 29.48. Nonetheless, signals are suggesting that price should get up to those areas. You can see on the 30-minute time frame chart, there's no topping pattern. It's triggered a Rhodes Momentum Indicator signal. That needs a bearish reversal candle to confirm a top. Now, on a monthly basis, we're going to go ahead and complete a TD9 count top at the end of this month out there. That says that could be a decent high that forms in the month of April. Perhaps it's May out there. I would just have to watch the daily and the weekly charting signals. The weekly already has a Rhodes Momentum Indicator top and a TD9 count top that's out there. So in the case of gold, it's just suggesting caution, Will Robinson. If we take a look at silver, silver on a daily basis is attempting to form an A to B equals CD pattern to the upside. So let's take a look at that. It just needs to close above its swing point, and that's going to be the swing point from the trading day of March the 6th. So let's draw this in here. Let's draw in the A to B point. Try that in. There's A to B. And then I'm just simply going to go ahead and move this over to the low of yesterday, which may be the C point of this A to B equals CD pattern to the upside. I'm going to try to do that. I don't know why I'm not. Come on. There we go. And so that A to B equals CD would get us up towards the 34, 31-ish level out there. If I look at the weekly time frame chart, price is trading above profile resistance, above its oscillator and change line, wants to make a run for its TD9 count top. That's from back in October 25th out there. 30-minute time frame chart does have a bit of work to do. It's got a Rhodes Momentum Indicator top. It's been consolidated with inside its profile. It's going to need a close above $33.79 for the rally to the upside to resume, and that is silver. If we take a look at light sweet crude on a daily basis has got a TD9 count bottom pattern. Price is trading with inside its profile. It's a bearish structured profile. But before price can get up towards that bearish zone at 68.45 to 69.52, it's got to deal with its oscillator and change line. And that's what it's dealing with right now at the 67.44 level. If we look at the weekly time frame chart, what we know about that is trading below profile support, but back into an area where we had a swing point that formed the week of September 13th. We never got down to test that low. That's somewhat bullish of a signal out here, and on a monthly basis, it's been a sideways move inside profile support after forming a Rhodes Momentum Indicator top. It did that with the three-river star in May of 2024. It came back and did it with a dark cloud cover candle in July of 2024. So you've got significant resistance with regard to light sweet crude up in about that 78, 74 range out there. Natural gas, which has a Rhodes Momentum Indicator top that formed a couple of days ago with that bearish shooting star candle. We've got price that's trading with inside its profiles. Right now, just waiting for that to populate. Price below the oscillator and change line on a daily basis tells us that it has lost momentum. So targeting the 382 to 406 area, that is its buy zone. On a weekly chart, everything looks good. Everything looks bullish there. The same thing on a monthly time frame chart. So it's just a daily that's doing some work. Now, on a 30-minute time frame, you have a negated TD9 count bottom. That says to Stevie, that says to you, 406 is the next area that price should move down towards. If we take a look at high-grade copper out here. High-grade copper is trying to take out a sell the D point top. That's a pattern that formed out here. Good things I have some of these things remembered. Of course, I review this every morning with subscribers. We go through all of this stuff, currencies, all kinds of things. So in this case here, with regard to high-grade copper, it needs to close above this sell the D point top that formed on the trading day of February 14th, and that high is at 4.885. If we close above that, we head higher. Now, that's the good news and maybe the bad news. Why? Because today's move has triggered a weekly TD9 count top that's going to complete this week out there. So watch, because if copper doesn't take out that daily top, but you got a daily top, a weekly top, and you have a monthly top out there with price consolidating inside its profile. So it just says be careful with regard to high-grade copper. If we take a look at that's not the 10-year, let's look at the 30-year out here. The 30-year, I forget the pattern, but it's consolidating with inside its profile. And it's got a TD9 count top. It's testing profile support at 116.19. A close below that would bring the 113.30 level into play. That's a TD9 count breakout area. It's got resistance at a sell zone between about 117.27 to right around 118.10 out there. What else do we want to look at? We don't need to look at the utility sector. Which sector is down the most? The consumer staples sector is down 2% out here, XLP. So let's go take a spin around that and see what it is doing. It's trading right now. So it has a Rhodes Momentum Indicator top. It's got a Wave 7 top. And price is trading below its bullish structured profile. Closed today in the XLP below 80.30. which suggests a run to 79.06 out there. That's its TD9 count breakout level. On the weekly time frame chart, we're back inside its profile as long as it remains below 80.30. If 79.06 fails, we'll see a move towards the 76.56 to 77.31 level. We come back to this break. We've got 3 requests out there: NVIDIA, XMTR for Hector, and GEO for Hector. Of course, I would love to hear from you as well. Send me an email, steve@tfnn.com, or inside the Tiger's Den. Any ping will do.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Before we go to those requests, let's take a look at the New York Stock Exchange, the Advanced Client Oscillator. That's the bottom panel on the left-hand chart that you're looking at. You can see the print right there. The red numbers printed out. We're at minus 160. So we're officially in the oversold territory. Now, I don't know where we'll be at day's end, but once you get down to minus 150, you're in oversold territory. Now, we take a look at the New York Stock Exchange. It needs to tick below yesterday's low. Seems like a likely outcome to trigger bar number 8. I'd mentioned that the Dow Equity Future contract was also going to form bar number 8 today of a TD9 count. I believe it was bar number 8 that is forming today. Here we need to see the New York Stock Exchange tick below 18,930.06 to get that signal as prices moving back into a prior swing point out here from January 13th. Pretty important swing point out there. So we're in oversold territory. We're getting, and we'll take a look at the daily cash indices as well, see if that any others on a daily basis are forming TD9 count signals or patterns out there. So this is preparing us for, a rather decent rally out there, especially as the VIX index, which is still in contango. I can't show it to you on these charts, but looked at it about an hour and a half, 2 hours ago, and we still had all forward future contracts were above the current future contract March out there and trade above the spot VIX index, and that says that's going to be unwound. That is not a normal way, and that says that all of the angst is really built up with regard to the market. That is, the angst in the market is all very short term out there. Of course, maybe short term can expand into long term. So that's what's going on with regard to here. They've got the VIX. It's still well above the 50-day exponential moving average. That's at 1914. So we are trading below yesterday's low. So that should be a bullish sign for the S&P 500. Although the ES Mini itself was trading, I believe the S&P 500 was trading lower, if I'm not mistaken. Yeah, S&P is off just by about 9 points. 7 points as we speak right now. So let's go take a look at, this is the euro. As long as we're here, the euro is trading as if the Ukraine-Russia war is over. At least that's my take on it. And I wish I could put up the other chart. I've shared this with you in the past, but I've noted on another set of euro charts out there is really all of the key dates when Russia did the 2014 in Crimea, when they 2022, I think it was. when they invaded Ukraine. I also have the October 13th date out there. When Russia, when Ukraine used U.S. missiles to shoot into Moscow or what have you, and we've taken out that Moscow one. And those levels were natural resistance points out there. So the way that the euro is trading, it's trading as if it wants to make a move up to the 112 level. That's its weekly TD9 count breakdown area. I surmise that as we get up to that area, that's where we see the euro begin to fall apart and start heading south again. If in fact that is the outcome, which is a run up to the 112 level, which there's no reason on these charts to suggest that that is not the outcome, other than maybe a daily TD9 count pattern that could form late this week or early next week out there. The euro should head up towards that 112 level. If that happens, you're going to see the U.S. dollar index continue to weaken out there. Will that weakening, help metals out there? Maybe, maybe not. The correlations don't seem to really be tied together these days. But in any event, let's go ahead and move on and take a look at NVIDIA. And this is for Tom. Of course, we've got Eddie, who I'm sure also wants to know what's going on with regard to NVIDIA. Let's actually get up the NVIDIA charts. These are the equity future charts. Nothing wrong with that. Let's actually take a look at NVIDIA. So what do we know about it? So if we take a look at, and Tom is interested both shorter view and longer term view out here. So if we take a look at the shorter view, that would be for me, that would be the daily time frame. So let's go take a look at the A to B equals CD pattern that has formed out here. Let's see if it's completed, because it is gap to the upside today. That would be a bullish reversal candle if it is completed that 1-to-1 move. So let's copy, let's paste. Let's take it over to that TD9 count top. And I'd say the answer is no, it hasn't really gotten down. It looks like the A to B equals C would get us down to 103. We've gotten down to a low of 104.77. Is that close enough? I'm going to go with the answer on the short-term basis now here, Tom, is no. So we don't have a completed A to B equals CD pattern to downside. Does that matter? Maybe, maybe not. What do you mean, Steve-O? Well, prices gapped up back inside its bullish structured profile. The level to be watching, as you can see, price was below this bullish structured profile 1, 2, 3, 4 days in a row. Now, where did price find resistance today? 115.81. That's the level where a counter, and also it's oscillator and change line. But the most important right now is going to be that 115.81 level. And that's going to be the most important thing for the rest of the day today, tomorrow, and so forth. If price is able to close above that, then it just says that this move is something more than a counter trend move out there, even though we don't have a daily bottom signal. I hope that makes sense. If I confused you, I apologize. Now, inside the bullish structured profile, if price is able to close above the center line, 115.81, odds favor a move up to 135.74, the top of its profile. So pretty nice spread out there. Option traders should definitely be watching that 115.81 level. Just simply, again, you close above that, increase the odds, doesn't guarantee anything. So short term, I don't know the answer as to what NVIDIA wants to do until we see it either close above 115.81, or if it closes back below 112.96, it's likely going to go ahead and at least target the completion of that 1-to-1 initial price projection of the A to B equals CD pattern to the downside. So that, I would say, would be short term. Long term, we'll come back to the weekly chart, but let's go take a long term, what the signal is out here for NVIDIA. The first thing that we can see here is NVIDIA did have a 2-month pullback. That was the months of December and January, and then we were up in February. Now we're trading a bit lower. What we're doing here is we have a TD9 count top that went ahead and formed back in June of 2024. That's really your resistance gauge out there. That price level is the top of the profile, should be at 140. I'm sorry, it's not the top of the profile. 140.76. If price were to close above that, it negates the TD9 count top, and you're likely off to the races. But we do have price that's trading inside a new profile out here. This profile formed above the prior profile. In other words, the bottom is above the prior bottom, center is above the prior center, top is above the prior top. From a profile standpoint, longer term, this is a bullish signal. Now, they could lose that bullish signal with a close below 109.42. So the answer to your question, Tom, long term is 109.42. If price closes below that, you could see a move back to 40.87. Am I calling that? No, I'm just telling you that would be the next support level out there. Likewise, if price can get above its oscillator and change line, center of its profile, right around 128.15 out there, then we ought to see it move up to the 146.89 level. So that's your long-term view. And really what you're waiting for is the laboratory. You're waiting for the market to tell you what it wants to do. I can give you the numbers because we know where the defense and the offense is at. And that's a beautiful thing. I mean, that is a competitive edge. You have to admit, and I can share it with you, if you just need one single reason to subscribe to Mastering Probability, it's having all of these profile levels. Yeah, the NVIDIA profile levels are in there, and every profile level for every sector inside the S&P 500 every evening, every morning out there, so that you have that competitive advantage. Sometimes those are new profiles out there. Now we take a look at the intermediate term time frame, the weekly time frame. It's got a TD9 count top. It's taken price back to support. It's got that same A to B equals C pattern they looked at on the daily time frame. It's support is held. Key number there, Tom, is going to be 104.33. So watch 115.81 on the daily to the upside. Of course, watch 112.96 to the downside. We come back for this break. We're looking at XMTR, GEO, Affirm, AMCN, AQST, and anything else that folks have requested. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. We got the stock charts up for firm AFRM as the ticker symbol. It's on my screen. This for McGuppy. He's looking for a long-term buy out there. Now, McGuppy, if we take a look at the daily time frame, you can see that this top with a wave number 7 top, letter G out there. That's, of course, not what you're interested in. You're looking for a long-term buy. That has turned into an A to B equals CD pattern to the downside. And price has attained the one-to-one. It's one-to-one price objective. Now what you're waiting on a daily time frame would be a bullish reversal candle. If you were to get a bullish reversal candle, then I would say from a long-term standpoint, it'd be okay to begin a position, maybe take the full position out there. The reason is you've got to sell the D point pattern on the monthly chart as well. And that has found support, or appears to have found support, at its oscillator and change line at 43.81. Now, if we were to see a close below 43.81, then your longer term buy point might be in the zone of 27.36 to 37.58. The only concern, if you do get a bullish reversal candle on the daily, is the weekly chart. The daily chart also has a wave number, it has a sell the D point top. That's perhaps the most important thing out there. Price is trading below profile support. And I don't have it. The next level of support is way down low. It's in the 17 area, 1650 level. So we're really not going there. So at this stage here, no matter what, you won't get any kind of a signal until you get at least a bullish reversal candle on the daily time frame charts for AFRM. So hope that helps you out. You had a second request, which we'll get to in a moment. I'm a little out of order here. We're going to take a look at XMTR for Hector and Patty. And Hector and Patty are looking for a buy signal here. So this got an A to B equals CD pattern as well. This has a TD9 count bottom that formed but wasn't negated. Let's find out. The low is March 4th, 2307. Did we close below that? We closed at 2304 on March 10th. So that pattern's been negated. So that would have been the bottoming pattern. So let's go take a look at the A to B equals CD pattern out here. Here's our A to B line. I'm just simply going to move this, Hector and Patty, over to the C point out there. And we are above. Okay, so we've attained at least the one-to-one level. So today, at this moment in time, don't know if it will stick. We've got a gap to the upside. Yesterday's high, 23.98. Today's low so far, 24.19. That gap is a bullish signal, that rising window out there. So now you have your buy the D point bottom pattern for the daily time frame. You're going to have resistance, the first resistance or the first battle around 25.29. Above that, you're looking at a sell zone between 27.86 and 28.81. The weekly time frame chart has the same A to B equals CD pattern to the downside. But what we don't have is a bullish reversal candle. And the next level of support for it is 1710. So if you were to get a close below the close a couple of days ago, that's at the price point of 2266. I would say get out of Dodge because it could be opening up a move to 1710. On a monthly time frame chart, price is trading inside its profile. You'd love to see it end the month above the top of its profile. On resistance or support will have held 24.78. If it closes below 24.78, you could be looking at a move back to 14.51 and 17.93. Would I prefer it to be something other than a gap to the upside because it's such a small gap right now as your signal for your bullish reversal candle? I would prefer that, but you don't always get what you want out here. So the weekly and the monthly, Hector and Patty are saying caution out there. The daily says it should at least rally to 25.29 or so, and above that, the sell zone, 27.86 to 28.81. You also wanted to take a look at Geo out there. Turns out my friend Dave is back as the CEO. Found that out 2 weeks ago. I need to give him a call. And GEO, you're looking here also for a bottom. So this has a buy the D point bottom that formed yesterday on a daily time frame. Let's take a look at it. Let's draw on the A to B line. That's, there's several different A to B equals CD patterns out here, but this is this is certainly one of them. This is more than a 1-to-1 A to B equals CD, maybe 1 to 1.618. Doesn't really matter. But yesterday you had that bull sash candle. So you have the buy signal on a daily time frame. Now that's the good news. All right, where are the battles? The battles, the first one so far, at least as 11:35, the defense has won, and that's at 24.95. That's the bottom of that profile. You need to close above 24.95 because you'll be then back inside the profile, and you'll be above its red oscillator and change line. And that would then indicate that GEO should rally towards a 26.57, 27.87 level. So that's a daily time frame. That's maybe the good news. On a monthly time frame, bad news or good news, potentially. It does have a sell the D point top. I'm not going to put that pattern there. You can visually see that. Formed that little bear sash candle last month. And prices pulled back basically to support at 21.98. So that's good. So what does that say? That says Hector and Patty watched the 21.98-ish area. It's that monthly chart that's the little bugger. It's trading below profile support. I don't have any bottoming signals or patterns or anything really. I would have to force an A to B equals CD pattern on the weekly chart. We're not going to do that, at least to the downside. So no pattern there to speak of. But watch 24.95. That's going to be your key level first. Hope that helps you out, Patty and Hector. Thanks so much as always for writing in. Let's take a look at the next request. It's for McGuppy, who wants to take a look at Amazon. Again, a long-term buy is what he is looking for. So what do we know about Amazon? Well, first, on a monthly basis, I don't believe we even have any kind of a top out there. We've got a gigantic A to B equals CD pattern to the upside. So on a monthly basis, what price is doing right, maybe I could find a small A to B equals CD. I'm sure I worked at it hard enough. Yeah, I don't even think. Yeah, okay. Let's say I can find one. So let's assume it's a sell the D point top. The one that I'm referring to would look like this. And I just want to just make sure it was enough of a retracement. So there would be your A to B line. Here, you just move that over. You can see that's probably a 1 to 2 A to B equals CD to the upside. But let's take a look at the profiles. This is what's important for you right now. You're trading below, or price is trading below the oscillator and change line at 204.77. It's trading at a potential level of support. This is where buyers and sellers believe there's fair value, 197.07, with inside the range between 169.79 and 242.52. So don't know whether this level will hold or not. Can we find some support? Well, let's go back to the daily time frame. And on a daily time frame out here, boy, it's really tough to form an A to B equals CD pattern here on the daily time frame. This is what it would look like, and it doesn't look like to me that it's completed. There's your A to B, so that's easy to identify, and that's how it's supposed to be, easy peasy out there. And there's your, if that will take hold, you can see we're not even close. Now, was that B point, which was a hammer candle, which had volume of 58 million shares, was a pass with volume out here, 49 million shares, 59 million shares. So the answer to the question is yes. It's got a confirmed A to B equals CD pattern to the downside. So that says you're headed down towards at least the 180-ish level. Well, that ties out really with the weekly chart. The weekly chart, we're trading below profile support out here. So 185.23 is likely your next move. So you're looking for a long-term buy out there. I don't have a signal, even on a daily time frame, to suggest that now is the time. So you're going to have to be a little bit more patient out there, McGuppy. I hope that helped you out. And as always, thanks so much for your request. So when we come back, we're going to take a look at AQST for Bob in Spokane. For Dan, we're going to look at SWIM, and we might as well look at BWLP as well. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, articles, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. If we take a look at XPEV, this for GTE, we can see on a weekly time frame, you are in bar number 9. So on Friday, you're going to confirm a TD9 count top. You'll complete that pattern the following week. That says to prepare for retracement back towards the oscillator and change line. That's printing right now at 1893. On the daily time frame, if you were to get a bearish reversal candle today, right now it's a shooting star. No idea what it looks like at day's end. That would tell me that the TD9 count top for the weekly time frame may be taking place as we speak right now. The monthly chart looks good, so you've got some turbulence on the day, potential turbulence on the daily and the weekly chart out there. Let's go take a look at AQST. This is for Bob in Spokane. AQST is right now, it has a Rhodes Momentum Indicator bottom for its daily time frame. It formed that yesterday with the bull sash candle. So we're trading above the oscillator and change line. So Bob, what you should expect or anticipate is that price will rally up towards resistance. That's going to be between the range of 297 and 305. That's where a counter trend move would come to an end. So you're looking for a close above 305. Of course, the next battle would be at 319 and 321 out there, but still a close above 305 would be a bullish outcome. The weekly time frame negated a TD9 count bottom pattern a few weeks ago, but it has found support at its breakout level, 264. So this, in fact, may have bottomed. To add to that idea is the monthly chart. The monthly chart has been trading with inside its bullish structured profile. It is testing the bottom of that profile as we speak right now, and that's at 260. So that has been tested. So you get a consolidation with inside a profile. You got weekly holding support at the breakout level, and now you have a bull sash candle yesterday. You should see AQST at least rally to towards 297 to 305 out there. Maybe it's more of a bottom than just that. Let's go on to the next request. The next request was to take a look at SWIM. For Dan inside the Tiger's Den, SWIM. And SWIM has had just one heck of a huge rally right on that daily time frame. Take a look at this rally from back on March the 5th, 6 days ago. Gigantic rally. And why did it stop where it stopped? Well, it was that TD9 count breakdown level. So what you know, Dan, what I know is 752 is a key resistance level. Just as that is resistance on a daily time frame, you've got support, and support is going to be at its oscillator and change line. Now, you've got a new profile that formed below price. It did that 2 days ago. That's a bullish signal out there. I think with SWIM, you're looking at maybe trimming it. So right now, you've got it's trading below between support and resistance. Right now, it goes 679 as support and 752 as resistance. On a weekly time frame, consolidation with inside the profile, with last week testing the bottom of that profile, 570 and holding. This is suggesting now it's a sell zone. It's a slightly bearish structured profile. So you got, this is going to be turbulent area out there, 691 to 781, and on a monthly time frame, also a consolidation with inside profile. 489 to 782 out there. So I hope that review of that charts helps you, because you're taking a look at rolling this, or maybe taking some of these shares out of here and putting them into BWLP. So we take a look at BWLP. What do we have out here? So we have a test and rejection of a swing point. That's a swing point from December 20th. That was 604,000 shares. It was tested and rejected with 610,000 shares. So 610 versus 604. Is that lighter volume? It's certainly not heavier volume, in mass or anything like that. So, okay, you've tested and rejected this swing point. At a minimum, you should rally up towards the oscillator and change line. That's at 1099. That's going to be the first key level of resistance that you will test. If price is able to overcome that, you then have the sell zone, in essence, where a counter trend rally would come to an end. It's an old bullish structured profile. That's between the range band of 1133 and 1152. Now, if there's a new profile that forms between now and then that whole scenario would go away. Monthly time frame, BWLP has found support at the bottom of its bullish structured profile. That's at 1033 out there. So just a consolidation between it and 1333. That may in fact be a bottom. The only place we don't have a bottom signal is that monthly chart. The monthly chart is suggesting that maybe over time it still wants to get back to the 704 level. But at this moment in time, it looks to me like you at least get a 2-day rally and you get up to the 1099 level. That was BWLP. LB wants to take a look at GORO, G-O-R-O. So let's pull those charts up here, see what this is doing. We've got GORO trading out right now at 52 cents. It's testing its daily oscillator and change line. So this informed a Rhodes Momentum Indicator top 4 days ago. You can see that nice dark cloud cover candle. But price is sitting at support. If this 52-cent area fails, what you will see, LB, is a move to 49 cents or 45. Now, just the opposite of what we have been looking at in the prior instruments, GORO has a bearish structured profile for the daily time frame. That price closed above for more than 2 consecutive sessions. So if, in fact, GORO loses the support level of 52, where a counter trend move to the downside, if it's only a counter trend move, meaning the retracement is just a counter trend, it would find support between 45 and 49 cents out there. If it closed below 45 cents, you're on your way to 33, maybe even 29 again. On a weekly time frame, we like it in that it negated a TD9 count top, but is struggling with a prior swing point from back on April the 5th. That swing point had volume of 13 million shares. Last week, we were up into it with 27 million shares. You got to love that. So as long as price, GORO, remains above, this is on a weekly time frame, above 45 cents, it ought to get back up to test 71 cents out there. And finally, on the monthly time frame, there's nothing bearish about this. Price is traded above profile and its oscillator and change line, likely to continue to move higher out there. Next request is to take a look at FANG. This is for Nicholas. His question is there room to the upside? Well, that answer is going to come basically at day's end. This has a profile that formed yesterday, so I'm glad that you wrote in. You're in an option position that's going to close. You're trying to time this here, get a little bit more out of it. The top of that profile is 146.43. We're at 146.80 right now. If price closes above that, then yes. Although, let me even open this up again. Let's do this here. So you're in an option trade, and today could be day number 4 to the upside. Yeah, this is traded for more than 4 days to the upside out there. So if it can close above the top of its profile, again, that number out here, and that's at 4 p.m. at 146.43. If it closes above that, then yeah, I can see even maybe it's going to have another day, but you potentially could be getting long in the tooth here with it being 4 consecutive days to the upside. And so just consider that. How about the weekly time frame chart? The weekly time frame chart has A to B equals CD patterns all over the place. It needs bullish reversal candle to confirm a buy the D point pattern out there. So that's not in place. So it's just a daily that you're playing along with. You do have a weekly TD9 count bottom pattern that could form between this month and the next 2. So you would typically see some type of bottom pattern on the weekly time frame to trigger the monthly out there. So I hope that helps you out, Nicholas. And geez, I think that is all the requests. Was there anything inside the Tiger's Den? I don't think so. I think I got everything out there. Oh, it's just one thing here. Let me just see. Take a quick peek. Nope. Okay, got it. Okay, so let me just we got just a few seconds here before day traded. Before we go to the next breakout, there, I just want to pull up the ES Mini, see what we have out here. So the ES Mini. The key level to the ES Mini, and it was proven again this morning. I think after the was it some inflation number data or something like that was released, 56.58. That's the number to be watching on the ES Mini. We close above that. Well, then the market will have perhaps changed its tone just a bit. But we don't have that as we speak just yet. Steve Rhodes with TFNN. We'll be right back. Look at that 30-minute TD9 count top today. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at the SMHs out here. They have formed, or are forming, appears to be forming a by the D point pattern out there. You've got the Three River Morningstar pattern that's going to complete today. Price is trying to get back inside his profile as we speak right now. So the first level of resistance on this move is 221.45. If we close above that, you've got resistance at 224.36-ish. That's its oscillator and change line. Above that, 228.25. 228.25 is the level where a counter trend move, if that's all this is, would come to an end. If you close above that, 238.46 is on the cards. It looks to me like a decent long trade. Potentially, you've got the weekly chart with price making, finding support basically near the bottom of its profile, 208.75. The monthly chart says, hey, I might not be done working to the downside out here, but right now, short-term basis, you may get a rally inside the SMH. Just watch the bottom of that profile and the oscillator and change line for further evidence of that. Satish, I couldn't pull up ALR or even AIR for that. So apologize for that. Don't know if it was a system issue that I'm having or what have you, but there was a request to take like a WU out here. WU formed a Rhodes Momentum Indicator top yesterday. Price right now is testing a key level of support. That's the bottom of its profile. That's at 1071. We're at 1070. Perhaps support holds. If it fails to hold, then we likely head to the support zone of the weekly profile, 1031 to 1056. The monthly time frame has support at 1055 as well. So you got a bunch of support down in this zone area, 1030s, 1050s-ish, if you will. But watch today's support. That's at bottom of that daily profile at the level of 1071 out there. So let's take a quick peek here at the ES Mini and see what we have for you. So the key level to the upside today is certainly going to be the TD9 count top that formed at 9 o'clock this morning, and that high is 56.75. So that's your key resistance point during the. Now there's other resistance points, but that's the real major one, if you will. Folks, stay tuned for all the great programming. Thanks for all your assistance today. Much appreciated. I will look forward to seeing you on Terrific Thursday. That would be tomorrow. Have a wonderful Wednesday. Take care.